Hello, hello, and hello. Welcome to another edition of Around the Coin. I am your host, Faisal Khan. Mt. Gox was one of the first crypto exchanges we all learned about and then its eventual demise. Slowly, more as more awareness about Bitcoin and cryptocurrencies became mainstream, more people got involved, which meant yet more exchanges. Today, there are literally dozens of exchanges all over the world. Some are regulated, some in gray areas, and many of them are simply not regulated at all. After the euphoria of Bitcoin and cryptocurrency trading in the second half of 2017, and not to mention the ICO filled crazy days of early 2018, the market tanked. Trading volumes are at an all time low, and we are what many consider to be in the winter of cryptocurrency. This brings me to the question of cryptocurrency exchanges. What challenges do they face? What are consumers asking for? And where are we headed? To answer these questions and more, I have with me today Andy Bryant. He is the Chief Operating Officer of bitFlyer Europe. Hey, Andy, how are you?
Hi, Faisal. Good, thanks. How are you today?
Good, good, good. So, for those who don't know, tell us your name and where do you work and what do you do?
Great. So my name's Andy Bryant. I'm the Chief Operating Officer of bitFlyer Europe, which is the European expansion arm of bitFlyer, which is a Japanese headquartered Bitcoin and cryptocurrency exchange.
And what does bitFlyer do? I mean, is it, you said you're Japanese incorporated of the European exchange, and I believe you also have a US presence, correct? Three exchanges and all?
That's correct. Yeah. So bitFlyer is the largest Bitcoin and cryptocurrencies exchange by volume in Japan, and we also have offices here in Luxembourg, where I'm currently sitting, to cover the EU market, and also in San Francisco we have a US office to cover the US, of course. bitFlyer was founded in 2014 as a Bitcoin exchange. We've since grown to sort of multiple cryptocurrencies, but focusing on sort of fiat pairings. But we also have a slightly lesser known R&D division, a blockchain research arm, where we're working on our proprietary blockchain technology known as miyabi. We have a license in Japan from the JFSA to run as a digital exchange, digital currency exchange. Here in the EU, we're regulated by the CSSF as a payment institution. And in the US, we have several statewide licenses, including the famous BIT license from the NYDFS. And that makes us still the only exchange that's licensed across the US, Japan, and the EU combined.
That's a big achievement getting a bit license from the New York DFS. I think it's one of the most coveted licenses out there, if I'm not mistaken.
Yeah, that's right. In fact, we were only the fourth company to ever get one, and the first non-US company to get the BIT license. So we were pretty proud of that.
So I get it. If you need US customers, you need to be licensed in all the states in the US. But why the need for licenses across Europe and Japan? Wouldn't the Japanese license suffice for you to take clients from all over the world, barring the US clients?
Not if we want to handle euros and sort of, offer our services and make financial promotions in the EU. We wanted to be licensed by an EU regulator as well. Of course, there are many exchanges that aren't taking this approach to regulation, but it's something that we care about quite a lot because we think regulation is fundamental to the future of crypto and virtual currencies. So that's why we've taken this approach.
So how come you didn't get licensed in like Estonia? Estonia has a crypto exchange license, and so does Malta. Why get a payment institution license out of Luxembourg?
That's a good question. At the time when our CEO Yuzo Kanno was looking at the expansion, it had always been part of his roadmap to expand outside of Japan, and we were looking carefully at which countries to go into in the EU. And the precedent was quite important to us. So we were looking at sort of where else had a crypto exchange been granted a license, and the only example we could find at that time was Bitstamp, who had also received a license from the CSSF here in Luxembourg. So for us, it was kind of down to either Luxembourg or London. And then, a timely decision of the Brexit referendum made that decision slightly easier for us. But the main reason was the case study of Bitstamp.
What about these so-called crypto-only exchanges that are propping up all over the world? How are they handling their licensing regimes?
Well, the short answer is, most of them aren't bothering because they're operating in a slightly grey area in the sense that they're waiting for clarification from the regulators about how to handle and process cryptocurrency payments and transfers. So until that coordinated response and clarity comes from the regulators, they're able to operate, without the same licensing that we have. So yeah, that's the main reason.
But doesn't that bother you because in some manner you are piggybacking their fiat to crypto and crypto to fiat rails because they come to you, they convert their fiat to crypto, they take it on to these other exchanges, do their trading, and come back to you for the off ramp. Isn't that like a nested solution that regulators sort of don't like?
It's an interesting point. I think at the end of the day, once you're in this crypto world, then of course there's like a universe of things you can do in terms of trading between different tokens and micropayments and moving things around. But at the end of the day, as you said, the on ramps and the off ramps are important, and they're the only way for many people to actually get into this space. If they're only starting with fiat, they need a way to convert fiat to crypto. So I think that's why the regulators have chosen to sort of focus in on exchanges as the main or the easiest place to regulate, and that's why we think that being suitably licensed and credible is a good strategy, because at the end of the day, we are an important part of the ecosystem for the time being. And even if we start talking about decentralized exchanges, at some point people still need to buy Bitcoin with fiat money. So
True, true.
we occupy that role.
Barring the territories that you're licensed in, are you picking up customers from outside these territories? For example, are you picking up customers from Africa, Sub-Saharan Africa, or South Asia, or Southeast Asia?
I can't go into too much detail about exactly the breakdown of our customers, but in the EU we're targeting EU customers, in the US we're targeting US customers, and in Japan we're targeting Japan customers. At the moment, it is possible to onboard to Japan if you're outside of Japan, based on the freedoms of our license, but only in an inbound fashion. So we don't market actively outside of our jurisdictions.
Okay.
Of course, there are like countries that we don't accept customers from because of various sanction lists and other things. But in general, we're focusing on our core market, which is EU, US, and Japan.
So you're not, let's say, truly international, like, let's say the competition would be like Bitstamp or Cryptopia or Binance, etc., that are accepting customers from pretty much, barring the sanction list countries, but pretty much from everywhere in the world, provided you can provide a KYC document to go with it.
We're not actively marketing in some of these other areas yet, but when we do, you'll be the first to know.
Okay, fair enough. And what about payout currencies? What are you supporting right now?
So in Japan, we're supporting the Bitcoin to Japanese yen fiat pairing, as well as sort of futures and FX in those terms. But then we also support altcoins, including Bitcoin Cash, Litecoin, Lisk, Ethereum Classic, and Monacoin, which is sort of like the Dogecoin of Japan. Here in the EU, currently we're still just a Bitcoin Euro market, and in the US, it's the Bitcoin US dollar market.
So you haven't taken things like Ethereum or Ripple or Stellar or Tron and so forth?
Not yet. No, I mean, until recently, I tended to tell people that we have a similar approach to Coinbase, in the sense that we're focusing on the blue chips and the large market cap coins. Although I know that Coinbase has recently started expanding their offering.
So Japan was one of the unique countries that really, thought this through and said, you know what, let's license this thing. They got a lot of FDI, foreign direct, investment coming in, and I think they had about if I'm not mistaken, about 100 applications for the exchange. How many are live, and what's the competition scene over there like?
Yes, you're right. There's a long line out the door for this Japanese virtual currency exchange license, and I think that's partly because Japan had the foresight and the wherewithal to be quite proactive and forward-looking in this regard. Actually, our CEO was instrumental in helping draft the law, like the change to the Payments Act, which was a precursor to the virtual currency exchange
So this
license.
is the chairman now, right?
Yes,
Okay.
Yuzo Kanasan, yeah. So yeah, Japan was kind of ahead of the curve in that respect. And while there were like a long line of people applying for the license, bitFlyer was actually on the first list of licenses that had been, the first list of exchanges that were registered with the JFSA. So we were amongst like the first handful. And by now, I think a couple of dozen have been granted already, but there are, a long line of exchanges waiting.
It was really nice to read that there's actually a Japanese Virtual Currency Exchange Association now. Tell us a little bit more about that.
So there was actually a couple of industry-led associations originally. There was the JBA, the Japan Blockchain Association, and then the JABA, and then those two basically merged more recently and became the JBCEA, so the Japan Virtual Currencies Exchange Association. So the purpose of that is just to basically a self-regulatory organization for Bitcoin and cryptocurrency exchanges to coordinate and communicate and develop best practices amongst ourselves with a strong connection to the regulator.
So let's say looking at now, and it's the 1st of February, so when we're recording this podcast, and looking a year back, how much has changed in the overall space of cryptocurrency trading?
Wow, I mean, a year ago it was a very different time, right? It was like right after the sort of peak of the latest bull run.
Yeah, it was an open season, right? Basically.
Yeah, it was. Yeah, I think, of course, like the main thing that's changed is that was, that was really the first big bull run driven by the ICO boom. And while kind of that is basically now sort of come back down to earth, I think ICOs in general were a welcome development because they really introduced people to sort of the benefits of tokenization in terms of faster settlement times and increased liquidity to retail investors. I kind of liken the ICO boom to the invention of fire. It was kind of a really exciting new technology, but without the right controls, people could get burned or the house could burn down. Whereas now people are talking much more about security tokens. And for me, to borrow from the same analogy, if ICOs was fire, security tokens is more like a internal combustion engine. So it takes that fire and puts it in a much more controlled environment where we can add sort of security and controls and layers that make it a much more powerful proposition and much more lending itself to more credibility and future applications.
I mean, we are in the winter season now, and it really seems like the last year has been the winter of discontent rather than the summer of discontent. It's been a Bitcoin winter, a cryptocurrency winter. The big boys have not stepped in as was perceived. What is happening generally in the scene? I mean, volumes are down considerably. The valuations are down in some measure up to 95% for certain coins. Where, as an exchange operator, what do you foresee in the next 12 months as far as user activity is concerned, especially with respect to the base coin tokens like Bitcoin, Ethereum, Ripple, etc.?
Yeah, I think one of the most notable things about what you said is that you didn't call it bubble and you didn't call it the death of crypto. You called it winter. So, and that's what everyone else is calling it. They're calling it the crypto winter. They're basically acknowledging that this is a seasonal thing, and no one's actually this time a year ago or last time this happened after sort of the 2013 bull run and subsequent bear market. More people were talking about the death of crypto and this is all over. Now people are calling it crypto winter. So they're basically kind of subscribing to the view that this is a cycle. And I think anyone that's been in this market for more than 12 months understands that this is a similar pattern that's happened several times now. 5 or 6 times Bitcoin has gone up by multiple X, 10, 20X in price and then lost sort of 70, 80% sort of retracement. It did it when it went from sort of $0 to $1 and back down again. And it did it again when it went to $100, $200 and back down again. Same with $1,300 and then with $20,000. So, I mean, I I can't give any guidance on price. I don't like to. People ask me about
No, no,
price
no,
all
I'm
the
not
time.
even asking on the price thing. I'm just
Um,
asking with respect to the general, the okay, fine, the bubble, if you were to take the word bubble, the
mhm.
euphoria bubble has gone back, but what about, the trading itself? How is that looking? Are people going to jump back in the ring?
Mm. Well, I think, of course, like when the price goes down, most of the sort of fear of missing out driven retail demand does tend to languish. We've seen that in terms of a drop in sort of user registrations for our more consumer-faced product. But meanwhile, sort of behind the scenes, all of the sort of day traders and sophisticated sort of high volume traders are still fairly active. So that's the sort of behavior that I'd expect from seeing kind of prices coming down. The traders that are making sort of daily profits are not really worried so much about the absolute price, so much as the volatility. And whereas it's when the price is kind of shooting higher, that's when you tend to see retailer interest pick up.
It's good that you mentioned that, individuals. How is your exchange volume? I'm not saying give me the numbers, but are you more individual trader, customer focused, or are you more institutional focused?
So we basically have products for both. Right now, we're focusing more on the consumer side in the sense that we're sort of developing uh, more optionality for our retail traders. We're working very hard on our so-called kind of Bitcoin buy-sell brokerage service, where instead of having an open order book where our users trade with each other, we have more of a accessible, easy-to-use interface where people can create accounts and then they can buy and sell Bitcoin and other cryptocurrencies directly from bitFlyer. So that's more of a kind of over the counter or sort of brokerage service. And of course, like as Bitcoin starts to mature and come of age, and more people are stepping into this asset class, we see a good opportunity to focus our energies towards the more mainstream market.
And what about awareness? Because I did a very brief survey. I reached out to a few people, and I asked them to list some exchanges that are well known, etc. Your name didn't come up. That was very surprising. I mean, it's there. I saw some of your statistics posted on your website. 250 billion plus traded in 2017, which is a huge number. Slightly more than what Nordea and Danske have been accused of for money laundering. But I mean, that's a huge number by any chance. But the fact that people don't know you, on a drop of a dime, how do you change that perception?
It's a good point. I mean, I think what's interesting about bitFlyer is that in Japan we are a household name, and this isn't just within crypto fans either. Like we have a sort of
So
I can't remember.
I'll pause over there, and I'll make you pause, and I'll say that I didn't reach out to anyone in Japan, so I'm sure that would have been true, but it was predominantly European and American folks that I reached out to.
Yeah, and this is it. I think we did a great job in Japan increasing our brand recognition. It's sort of right up into sort of the high double digits in terms of household awareness, and that's partially thanks to a pretty successful TV commercial campaign we had a very good timing. So we kind of successfully had a marketing coup over in Japan, and but yeah, you're absolutely right. I think in the US and EU we don't enjoy the same brand awareness. So that's a job for me and for my counterparts in the US. That's something that we're working on now, and we're pleased with our roadmap for that. But it's still fairly early in our expansion stories, so I'd expect that to change.
So since last summer, I've been reading that your exchange has more been focusing on getting, for lack of a better word, and nomenclature, really notwithstanding, you're getting its act together, right? Getting more compliance and governance issues resolved, more on security, drumming down areas and tightening the areas related to money laundering, etc. Tell us a little bit more about that, because you were chided in many ways by the FSA in Japan for this.
Yeah. So what happened is that back in March, as we know, one of our bigger rivals in Japan, CoinCheck, got hacked to the tune of $500 million worth of NEM tokens. Now, up to that point, the JFSA had been sort of quite supportive of the industry and rightly trying to encourage innovation and a growth of this exciting new space. And then after CoinCheck, they suddenly kind of became a lot more, let's say, hawkish which is absolutely right. I mean, they're obviously worried about consumer protections and things like that. So they ordered an industry-wide audit of the licensed or registered virtual currency exchanges, which included bitFlyer, but also included all of the other registered exchanges. And that exercise culminated in them issuing a business improvement order to us, as well as basically all the other exchanges. And the subject, the topics of that business improvement order was, as you rightly said, it's just to strengthen some of our processes, basically trying to bring us up to sort of bank, proper financial institution levels of quality. And we've always been welcome to the regulators. We've always had a good relationship with the regulators, and we took their advice on board, and we've been working since then to put into practice some of their recommendations without without any problem with doing that, because we really think that we take regulation seriously, and we want to be credible and watertight.
Yeah. Did it take any wind out of your trading volumes just by being compliant with or trying to be compliant and the process of being compliant with what the FSA wanted you to do?
I think part of the things that we were asked to do as part of this improvement order was to temporarily suspend onboarding new customers. So in that regard, it took the wind out of the sails in terms of our new volume growth. And yes, in other respects, we're putting a lot of resources into making ourselves, very, very watertight and high quality compliance procedures, when we could have been spending the same resources on big flashy marketing campaigns and things like that. So yeah, from that perspective, we have been sort of focusing more introvertly this year instead of going out there. But being a bear market, it's a good time for us to be doing this. We're just focusing on kind of heads down development, improvement projects, and preparing for the next big wave up.
Sure, sure. But there have been some issues. I mean, I was reading Cryptopia, which is I believe it's an exchange out of New Zealand, if I'm not mistaken. Just got hacked a few days ago, and a couple of $1 million worth of Ethereum tokens were taken out. And then it was more ironic, and not to mention funny, is whilst they were being investigated by the police and forensic experts, more tokens got stolen during that time, and now the number stands at 23 million. How does your exchange, now that you're being regulated and there's a consumer financial angle to it, how does your exchange sort of, allay this fear that, if tokens are placed, they can be placed with a trust of the consumer and that they will not be hacked?
Well, I mean, we're of course very serious about this topic, and it's what keeps us up at night and what we spend all of our time and efforts uh, sort of polishing and improving. We use state of the art servers and technology. We use state of the art network protocols. We have large and very capable security teams, including people we hired from the US DoD and so forth. Nearly all of our coins are kept in sort of very deep cold storage, so not touching our exchange. We have early warning signs if there's any kind of strange behavior going on in terms of trading patterns or transactional patterns. So really, we're using state-of-the-art techniques and teams and infrastructure to satisfy all of the obligations of a financial institution.
Do tokens placed in your organization, are they insured by any ways?
We do have an insurance policy in Japan, yes, which has global coverage.
So explain that to us. What does that mean?
I've got to be honest, at this point, I don't quite know all the fine details of our insurance policy, so it's something I would need to get back to you on. But it does offer a level of protection on our customer assets.
And coming down to something again a little bit more ironic, we do talk about decentralized exchanges, or rather, we don't talk enough about decentralized exchanges, yet the very token that you are trading on your centralized exchange happens to be decentralized. Where do you see the market going? Do you see decentralization exchanges, or DEX as they're commonly affectionately called, coming up? If so, what role would you have to play? And especially once these exchanges do go the decentralized route, how will they be in many ways regulated?
Well, that's a very good question. I mean, I I think decentralized exchanges are a very interesting topic, and I think they definitely have a future. I think they're very exciting technology. But as I alluded to earlier, at the end of the day, if you want to be interacting and conducting yourself on these exchanges, you will need to at some point get into the ecosystem. So if that means spending Japanese yen or US dollars on buying Bitcoin as your kind of reserve cryptocurrency, then you won't really be able to do that on a decentralized exchange, at least not in the current state of affairs. I don't sort of see, I see centralized and decentralized exchanges sort of running in parallel, side by side, not really challenging each other at this stage. I do think it's an interesting technology, and it's something which I think a lot of us are looking at.
More like hub and spoke, right? Where you are playing the role of the hub.
Yeah, you could put it like that. Absolutely. I think that's a good way of putting it. I think obviously there's pros and cons of both, right? With the centralized exchange, of course, we are like collecting and holding a large amount of assets for our customers, so we need to be very careful about the security around that and our compliance procedures. But it does mean that we also command a very sort of large liquidity pool, and we have a proprietary matching engine that can sort of settle and transact these trades very fast. The decentralized exchange, you don't have the centralized accumulation of assets, but then you do have to think about the matching engine and the order book. And actually, you can decentralize one or both of those things. You can have a decentralized order book and a centralized matching engine, or you can have a decentralized matching engine and a centralized order book. And then you start to need to think about all of these second layer protocols to square those circles. For instance, I know you had an interview with the Radar Relay guys quite recently, and I think those kind of protocols are looking into these problems, but they are very much technological problems that we need to solve.
What about institutional players? Where do they stand? When we talk about the likes of J.P. Morgan and Wall Street entering, or the financial district from London entering into this mainstream and trading, and the price going up to the moon. When is that going to
Mhm.
happen? Specifically, now that we keep hearing that there are, you know, I guess, mixed signals being given by various governments. Venezuela is one, Russia is one, some certain other nations, that they might start looking at wealth creation, value storing on the blockchain, on the crypto world, and perhaps the ramps might start with Bitcoin.
Mm. That's a very interesting topic, and I think well, there's two topics in there. There's the institutional investors, and then there's sort of government
Sure.
interest that you mentioned. I think the interesting thing about institutions is there's what they say, and then there's what they do, right? So there's plenty of sort of big banks that go out and they say certain things about cryptocurrencies, whether it's positive or negative comments, and then but that's on the face of it. And then meanwhile, many of these big banks, even if they're saying not exactly favorable things about crypto publicly, they're
Yeah,
meanwhile
trading.
opening up all sorts of trading and their own desks and making investments behind the scenes. So we're certainly seeing a sort of increased interest in institutional interest behind the scenes. We're seeing a growth and sophistication of the OTC markets. And the way I see it, and I've kind of read similar things from other influencers, is that if you're a hedge fund or a pension fund and you're sort of trying to find yield in this yield-starved environment, trying to figure out what to invest in, and you've got more and more of your investors coming to you and saying, "Hey, what about crypto? What about Bitcoin? What about these gains?" In my mind, that the risk reward or the risk return ratio is still asymmetric. So while that's still the case, in the future, it's not going to be a question of who is invested in Bitcoin or crypto. It's going to be a question of which funds are not invested in Bitcoin. Because if you're a fund manager, you have a fiduciary duty to deliver returns for your clients. And if you don't put even 1% or 0.5% or 2% of your entire portfolio in this new asset class, I think there'll come a time when that is looked unfavorably by investors.
I mean, if you look at the size of the derivative market, which, depend who you talk to, can be anywhere from 700 trillion to 1,000 or maybe 1,100 trillion, looking at just 1% of that. I mean, just 1% of 1,000 trillion would be about what, 10 trillion?
Yeah.
And imagine forget 10 trillion. Let's just take 1 trillion, 1 trillion being entered into the Bitcoin ecosystem, what that would do for the market. Do you see that really realistically happening? Because there was a very cool thing going on Facebook. I'm sure you must be aware. It's the 10-year challenge. Put your 10-year photograph, the one that you had 10 years ago with the one that you have now.
Yeah.
And
Yeah.
on the various crypto forums, they were, making they were taking the mickey out of it by putting the 10-year ago price of all these coins versus today, and showing the phenomenal growth. So where do you see 10 years from now?
Mm. Well, as the late Hal Finney said, and I'm afraid I don't know his exact words, so I'm paraphrasing, but every day that Bitcoin survives without going away, it's getting stronger, it's building more trust, it's attracting more interest and investment, and it's been 10 years now and it's still here. So I personally don't think it's going anywhere. And you're right, it would only take a small amount of reallocation from existing portfolios would potentially make a big difference to the price. I like to remember that, for me, Bitcoin and cryptocurrencies are a new asset class. And really, it's the first new asset class we've had since 300 years ago when the Bank of England wrote the first gilt-edged security. So really, this isn't just a new company or a new stock or a new equity product. This is a whole new ball game here. So as long as failing in any sort of huge catastrophe in the space or some sort of security breach, which I think is unlikely, there are some exciting times ahead for this market and for the pricing.
A very interesting question that was popped up to me is, how do the existing commodity and currency and equity exchanges that have a very large user base, have a very seasoned presence in their respective territories for getting investments and so forth, how will they play out in the coming years when they feel that this is something that they need to step into? How will, and I'm not talking about your Nasdaqs and NYSEs, I'm talking about emerging markets. I'm talking about the Manila Stock Exchange or the Bombay Stock Exchange or the Karachi Stock Exchange or the stock exchange in Johannesburg and so forth. How will they come into the play vis-a-vis crypto exchanges like yours and they themselves trying to enter that space?
Yeah, I see an increasing number of win-win partnerships whereby the sort of established exchanges, such as the ones you mentioned, who can bring great sort of customer bases and great capital and know-how in terms of high frequency trading and settlement, things like that. But they don't have the know-how in terms of how to handle crypto assets, how to handle crypto security, how to handle hard forks, and understanding these types of peculiarities. That knowledge, of course, that is possessed by the existing crypto exchanges who have sort of started from the other side. So I see an increasing number of cooperation between the old and the new, and partnerships and potentially mergers, which will eventually result in sort of multi-service exchanges and financial institutions.
And do you see the traditional, instruments that are being traded on these equity exchanges coming on the crypto exchanges? I mean, people would love to buy, I don't know, 48 cents worth of Berkshire Hathaway or, $34 worth of IBM. Would such micromanagement products or, highly divisible shares come onto the crypto market?
Yes, and I think you've touched upon something really exciting there, because I mean, everyone talks about security tokens, right? But few people kind of really truly understand the point they're talking about stable coins and what's the point of
I mean,
stable coin
fractional ownership. And when we talk fractional ownership, when it comes down to the kind of change that is sitting in your sofa, when you enable that change, like the one, when you talk about pennies, and those pennies can be invested into stocks, and pennies drops make oceans, it can have a huge impact. Yet it's a utopian dream for many, but I think it's not far away.
Exactly. And yeah, and this is what I mean, because like fractional ownership is just one example of a brand new paradigm which is enabled by these sorts of technologies. Because I think, there'll be existing security. But we're talking about, and I'll come onto the fractional ownership thing shortly, but because it's related. But yeah, when we talk about security tokens, it goes in two directions, right? There's actually tokenization of existing securities and then securitization of existing tokens. So people think about, okay, well, we'll just take IBM stock and we'll tokenize it so we can trade it, so we can have better liquidity or 24/7 markets or whatever. So what? But then there's also entirely new industries entirely new applications that become possible by this tokenization. As you pointed out, there's fractional ownership. But there's also brand new assets that can now, or income streams that can now be tokenized. I'm talking about things like we've got your fractional ownership of art or
Well,
other types
real
of
estate
assets.
is the low hanging fruit, right? So countries can say, hey, listen, I'm going to a person can say, I'm going to construct a building at $700 million. Let me give you shares down, 700 million shares. You can buy $1 worth of share, and I'll do a guarantee buyback at 7% a year after 5 years.
Yeah, yeah, and I often use real estate and Berkshire Hathaway share as a good example. But even still, that is just that's more like a tokenizing an asset value. But we can start talking about income streams. What about the income streams from song rights or from movie rights, or an income stream from a small family restaurant business? These can all start to become securitized and actually traded as a new kind of tokenized form of small business. So I think there's a whole segment of the economy which can be sort of turbocharged by adding these security tokenization wrappers and getting them out into the market and getting a tradable platform. And we can unlock a whole huge amount of economic value from these types of
So,
technologies.
Andy, who gets to do this? Is it not incumbent upon you to go and say, okay, we can take this and repackage it or package it in a different way and have and trade it in our exchanges because you have an exchange, or do you sort of wait on the sidelines and sit on the bench and wait for someone to trot along and say, hey, would you do this for me?
Well, that's a really good question because there's tokenization, there's tokenizing existing securities, there's securitizing existing tokens, there's brand new assets or income streams that can be converted into smart contracts, and all of those things have completely different sort of value propositions and require different skill sets. So I think it'll be a combination of sort of new tech companies, of existing kind of crypto incumbents, and then traditional financial institutions too. It's difficult to know how it'll play out, but I certainly think once people start to catch on that security tokenization is not simply a rewrapping or repackaging of something that exists, but a new vehicle to onboard brand new areas of economic activity, I think there'll be like a large and fast growth of this industry and many new
And I
players.
take it you will be at the center of it and also be the catalyst, correct?
We're certainly looking at it closely.
Andy, earlier you mentioned something about your miyabi blockchain. What is it? Explain it to me like I'm 5 years old.
So miyabi is a proprietary blockchain technology which we're developing in-house. We're kind of quite pleased with it because we think it takes all of the benefits of existing blockchains, such as immutability, Byzantine fault tolerance, no single point of failure, but it addresses the common criticisms of open blockchains. For instance, we can actually offer transaction finality, which is important for some institutions. We have improved processing capabilities, so thousands of transactions per second with payload instead of simply a few. So it's not just yet another blockchain that we're working on. I think we're kind of proud because we really do have existing use cases, both in production and proof of concepts. Examples being in production, we have an insurance documents application where we're communicating between headquarters and insurance branches in Japan. We're working with a real estate rental management company, Sekisui House, where we're managing their real estate information on the blockchain with the intent of creating a corporate consortium. We're working on a proof of concept with the Japan Bankers Association, where we're basically working on an interbank settlement mechanism on miyabi. So this is something that we're really starting to focus on because we see it as a key differentiator and value proposition of our technology.
Is it open for others to participate in and like sort of go on? I mean, is there like an SDK or I don't know, a sandbox environment where people can come and start playing with it?
If people want to start playing with it, the best thing to do is to get in touch with us. We have like a bunch of things that we're working on in a kind of in a sandbox environment. But as far as I'm aware, there's no sort of public portal right now to start playing with that.
So how different is this from, let's say, I don't know, Ethereum and their smart contracts?
So Ethereum, of course, is it's an open blockchain, which means that the decision making and the system are both decentralized. As anyone that's following Ethereum knows, that applications like CryptoKitties completely clogging the system last year. Ethereum still suffers a little bit from scalability, as most public blockchains do. So what we're doing is as a private blockchain, we're not suffering from some of those scalability issues, and we can offer sort of all the benefits of open blockchains, but with some other benefits of a private blockchain at the same time.
And these contracts or these applications that you have running on miyabi, they're being run on the exchanges that you are licensed for right now. I mean, can I sign up for them and use them, or is it a very bespoke use case that is only applicable to, let's say, the clients of that insurance company?
So bespoke, customizable, and we're very open to talk to like any whole variety of different projects and clients. So it's a B2B product right now. So yeah, I'm afraid you can't just download a version of it and start playing around. But we are building it with the intention of big things, and that's why we're building customizability and differentiation into it from the start. We do have a smart contract layer for it, and then we think it's very flexible. We actually have some things that we haven't really seen before, like we maintain transaction security by actually inspecting blocks before they're generated to prevent fatal bugs. But this is the point where we start getting into the point where I'd need to refer you to our R&D engineers, because I don't know the full detail of it.
Well, thank you for explaining it, Andy. It's been wonderful to have you. bitFlyer, how can people get in touch with you, and how can they learn more about your products?
Thank you very much. Yeah, it's been really great to chat to you. I think feel free to reach out to me. Our website is bitflyer.com. If you want to get to the EU site, it's bitflyer.com/en-EU. And myself, you can find me fairly easily on LinkedIn, Andy Bryant, bitFlyer. And yeah, be happy to be in touch.
Thank you, sir. Have a good one.
Thank you, Faisal.
The views and opinions expressed on any program are those of the hosts, co-hosts, and guests appearing on the show, and do not necessarily reflect the view of the owners and producers of the show. Paid advertisements in form of audio announcements may appear throughout the show, including this one. Advertising can also include print and other digital formats. The owners and producers of Around the Coin do not endorse or evaluate the advertised product, service, or company, nor any of the claims made by the advertisement. All programs are subject to a one-time charge for professional editing fees, for which the interviewing guest or guests may have contributed towards. The owners, producers, hosts, co-hosts, and guests on the show are not financial advisors. Any investment advice or opinions cited during the show is for information purposes only. None of the content is intended to be investment advice. Seek a duly licensed professional for investment advice. If you believe there's been any violation of your copyright, trademark, service mark, or any other type of intellectual property, please inform us in writing by sending an email to legal@aroundthecoin.com.